Hey everyone, welcome back. Today I'm going to be going through all of my filter settings on unusual whales. I know there's been a lot of changes since the last time that we had a video similar to this, and I wanted to touch on some of the new features, take a look, and just provide everybody with a refresher. Now the first thing I'll say is, if you're a new user, you're brand new to unusual whales, I get it. There's a lot going on here. There's a lot of data, there's a lot of filters and options, and it seems really overwhelming. Don't worry. I'm going to take you through it step by step. It's a lot easier than you think. There's a lot of data there, but it doesn't have to be hard to use. So let's get right into it. So the first thing that you're going to see here is our screen is filled with the SPX, and that's an ETF. That will come up in the emoji section. But I'm going to go one by one. So we have the filter of tickers, and you can enter whatever ticker you'd like here. And I'm going to use a favorite here and just put in Tesla for everybody's reference purposes. So you type that in and you will exclusively see Tesla. That's how you use this area. Now, what if you just don't want to see something specific? Then what you do is you hit the subtract button, that's minus, and let's say SPX. I don't want to see SPX, right? Now I could look at everything else except for SPX, and you hit a comma, and you can continue to exclude things. So if I don't want to see SPX and I don't want to see the SPY, I could do that as well, right? So now I don't see SPX or the SPY. And let me just do one more to drive the point home, SPXW. And that disappears off the screen. So you get the idea. I'm going to remove these now just so we can see everything showing right back up. And we'll take a look and move on. We next move to the time filter. I just have a random time here because I wanted to demonstrate the ability of this particular filter. You can not only filter by day, you have a menu here. We can go today, yesterday, last 7 days, so on and so forth. But you can also set up a custom range. And one thing to note is not just excluded, it's not just specific rather to the date. You can set the time here, and this is on a 24-hour period. And of course, this will be local to your own time zone, but you can go 13, 10, whatever it is that you like, apply it, and then this will adjust. So sometimes you're just looking at specific periods of the day, and that might help you out as well. Next, we get to the premium range, and I just have a sort of random premium setup in here. If you want to learn more about the premium range, this is the one area where I have an entire video dedicated to this. It's very, very nuanced, and one thing I'll tell you is to beware of anybody telling you to set a static premium. So if somebody says, just set $50,000, or we only look above $25,000, or we only look at X, ignore them. They don't know what they're talking about. That's not how securities work. We have different securities that have a different amount of options trading volume, different caps. So what you might see purchased at 1.05 million on the SPX, that would be extremely, extremely significant on a smaller security, and you might not see that. You have different premium sizes on different securities based on their size and how much the options are traded. So there's no one size fits all. That's something someone makes up who doesn't understand the nuances, and trading's all about the nuances. Just like you won't see as big of volume on, let's say, Riot, right? The security, RIOT, in the crypto space. You won't see as much volume there as you will on Apple, because Apple is a $1 trillion plus company and Riot is a multi-billion-dollar company. Both big, but big difference. So watch that video. I will link to it. The premium range, it's very nuanced, but I'll explain how to filter based on the company that you're looking at. Of course, I leave the spot range as it is, size as well, because I'm more concerned with the premium. I don't turn off any of these as well. Another red flag, guys. If somebody tells you only look at the bid, only look at the ask, because if you hit the ask, that means you're desperate. No, knock it off, right? Look, I'll make this part simple so everybody understands. The idea of filtering out the bid side is akin to lunacy here. It's, again, somebody who doesn't know what they're talking about, but they're taking you on for the ride because they want to get clicks, they want to, get you in their Discord group, whatever it is. Somebody wants to just push that out, and they haven't really researched their opinion, which is very dangerous in this space. If I place $1 million trade on, let's say, Tesla for this Friday, and I purchase at the bid instead of the ask, does that mean I'm not exposed, that I'm not serious, and you should not look at that? No, of course not. That's silly. I'm placing a big, big bet on Tesla. We'll just call it bet for argument's sakes, right? There's a big investment. I'm heavily exposed, so that is a high conviction move. I just happen to get it at the bid side, and that's often because on a large trade, the seller will acquiesce and meet you at your bid side, right? So you don't turn any of them off. Yes, if I pay more and I hit the ask side, I'm paying an even higher premium, so you can factor that in. But the idea of disqualifying one, the only thing I would disqualify there is somebody who tells me not to look at those. Because again, if I'm coming in at the bid side and I'm spending $1.05 million on something, you can't disqualify it and say, well, they're not serious. They don't really think it's going to move. Yeah, I $1.5 million or $0.5 million think it's going to move in my direction. Of course, there's hedging aside. So I leave all of these on. That's good data to have. Where we dig in is on the emojis. And right now, I don't have anything specific selected, but I'm going to show you what I turn off. Right? As we scroll down, these are all fine. I like to turn off dividends in general, earnings, and ETFs. So why do I turn those three off? Let's go one by one. Dividends, a company's issuing a dividend, you'll often see higher activity on securities that are issuing dividends, and that creates a lot of noise. I like to speak in terms of noise and signals. Noise is an aggregation of data that doesn't really provide me with a clear direction. A signal is something that's clear. So when you're dealing with a lot of data, you want to filter things out. That's what we're doing here in this video, right? We're filtering out the noise so we can get a precise idea and be accurate, because as much as possible, you want to be accurate over a long period of time. That's what makes you a successful trader. So dividends go off, and for a similar reason, earnings go off for me as well, because at earnings, there's so much speculation in both directions that it creates a lot of noise. Not only is there speculation, there's a lot of hedging for institutions or players who have underlying positions. So I turn that off. It doesn't mean that I won't look at it. I just turn it off so that I can look at it later on through the lens of knowing that this is a company with earnings coming up, right? And then of course, exchange traded funds, things like the SPY, etc. I turn that off as well. I don't like that enabled because it creates too much noise. The screen fills up with it. There's too many tickers. There's a lot of speculation. And of course, ETFs are the aggregation of multiple different securities. So you don't get nearly as good of a read, right? The idea of looking at an ETF, it contains a lot of different securities. Some might go up, some might go down. So to get a read on the entire thing is difficult. Essentially, you're trying to read the overall market. So I turn those off. And as I scroll down, there's really not anything else that bothers me. I leave the rest on. So let's take a look a little bit further. Expiries, I leave all on because I will set my expiration dates in the DTE, right? And I'll get to that in just a moment. Sectors, I leave all the sectors on. I do filter individually later on, but just as a general overview, there's nothing that I'm turning off unless I specifically want to look at a sector. That's an easy way to think of it. Now for expiries, as opposed to clicking off individual expiries one by one, I'll have a days to expiry range. So this just means when your contract is going to come to expiration, right? So you see some 7/15s, some 6/17s, it's June 17th, July 15th. I will set a certain range of days here. Now, this is the second item, the first being premium range, the second item where I have a specific video. There's a lot to understand about the DTE. Some people think that, you shouldn't look at something that is too far out. Some people think that if it's too soon, it means something else. We dig into all of that, and because it's nuanced, it has its own video. Strike range, this one's important. I do not turn anything off on these strikes. Another red flag, and just keep in mind, one of the reasons that I spend time explaining what not to listen to isn't because I enjoy going on these furu attacks and spending time or wasting time on that. It's rather to juxtapose what's real versus what's fake, because there's so much misinformation in this space. It's like any space where there's a lot of money, like health space. You're going to get people selling magic pills because they have an opportunity to make a quick buck, and they'll try and sell you a plastic bracelet and tell you that it'll cure all of your ailments. You won't have arthritis anymore if you wear this bracelet, people will say. Guys, be on the lookout for people who don't know what they're talking about and look for ways to spot them. One of the ways is for someone to say, oh, we ignore things that are deep in the money. Why? Oh, well, but that's because, it's deep in the money. They're not serious. That doesn't make any sense. Even if I purchase something that's deep in the money, I'm still exposed. I'm still putting millions of dollars down, let's say place a trade, and that I'm on Tesla. We're going to pull up Tesla right now just to take a look. Okay, so let's say I have a call on Tesla, right? And I'm in for, let's say $71,000, right? And it's not a huge amount on Tesla, but it's 250 calls. So I am deep in the money. Does that mean I don't care about my money and that I'm not serious? You guys get the idea, right? There are millions of dollars placed on deep in the money calls, right? Look at this. This is pretty deep in the money. There's an 800 call. Does that mean they're not serious? No, they're $1.35 million serious. It is significant. And if you're looking to follow the flow and see what whales are doing, this is a whale. This is somebody who has 1.35 million to spend on options, right? They could be hedging, they could be speculating, but it's serious. So somebody who says otherwise clearly has a very poor understanding of the market and have come up with a formula that they might be pitching to you confidently. But remember, just because someone pitches something confidently doesn't mean they know what they're talking about. And that's why you see a lot of people are very anonymous in this space. They won't reveal their faces. They just put up cartoon emojis. They won't talk about their history or their past. They won't get into really technical details. They like to keep it surface level, stay somewhat anonymous, and just stick to a script. So be careful for that. I don't turn off strike ranges because I'm interested in seeing what's happening at all strikes. It's all significant. Now, are you more exposed if you're out of the money? Yes, that's because there's something called extrinsic premium versus intrinsic, right? Extrinsic value versus intrinsic value. Something that's in the money, deep in the money, is all intrinsic value. And something out of the money, of course, you stand to lose potentially 100% of your premium. So I just look at it through the lens of exposure. But the idea that you're not exposed is the example I gave you. If you put millions down, deep in the money, out of the money, you're still exposed to moves in the underlying. Like if Tesla goes down, just because you're deep in the money does not mean you don't lose a lot of money. And people don't like to just throw their money around. So again, I like to point out the things that are just easy for you to identify. And don't worry if someone's had a bunch of lucky guesses or if they get it right every now and then. Just be forearmed with the knowledge of knowing when someone's guessing and doesn't know what they're saying, because it's dangerous. And this is finance. Like I said, there's health space and your finances. You want to be financially healthy and you want to be physically healthy. So just be careful for people who don't know what they're talking about when it comes to either one. You wouldn't wear a piece of plastic to treat a serious underlying condition. So we leave the strike range on, and I wanted to underscore that because I know a lot of people are turning that off and they're missing some big plays. And then I leave everything else on, right? The volume range, the differential, open interest range, that's all fine. As we scroll down, there's nothing else that I will specifically turn off. And I'm comfortable with seeing the rest and I'm able to interpret it. So I think that gives you a pretty good idea. And then when you look across the board, you get a good idea. We'll go through this just really quickly again. So, you can filter, you can add, and you can use the subtract button to filter certain things out. Premium range, separate video. Please do take a look at that. I deep dive into it to help you understand what size, what premium you should be looking at for what specific securities. For example, for something like Tesla, I might filter up and go a little bit higher because 40,000 isn't as significant, right? So I'm looking for the big players who are involved hedging for moves. Of course, we have the time range you can narrow in. I'll leave everything on here. Let's move down. Days expiry will cover me for expirations. On the emojis, I made that clear. We're trying to get rid of what we call noise and look for signals. And then strike range, I'll leave everything on. Hopefully that gives you a bit of an understanding as not just to what my filters are, because I don't want people to simply memorize what I'm doing. That doesn't help you. I want you to understand why, and that's why I dig in on each and every point. If you want to learn more about unusual whales or options trading in general, of course, you're free to follow me. Profits taken. I became a professional in 2005. I managed private equity and have been in the space since. I actually started trading in the very late 90s, but I was terrible. So I've been around for a little while. And of course, if you want a deeper dive in breakdowns with swing trade callouts and tutorials and lessons, and you feel that you're ready for that, you can go to profitstaken.com to join the Insider Access program. I'll leave a link to that down below for those of you who are interested. And if you're not, just follow me on Twitter. Finally, if you are signing up to Unusual Whales, feel free to take a look. I will leave my referral code. Hopefully this is helpful. If you have any specific questions, please feel free to leave it in the comment section and I will respond as soon as possible. All right, guys, hopefully that helped and we'll talk to you soon.